Welcome back. We're continuing on our financial statement exercise with the equity statement. Now that we have our trial balance all categorized, we have our income statement, we have our statement of other comprehensive income, we can prepare our equity statement before we move on to the balance sheet. With that, let's get started. For company B, I'm going to do my equity statement. And this is for the year ended December 31st, 2020. So that is still for a period. Our equity statement is still for a period. So with our equity statement, it's going to be a little different because we actually, what we do is we put columns for all of our individual equity accounts right along here. So I have common stock, I have treasury stock, additional paid-in capital, non-controlling interests, accumulated comprehensive income, and retained earnings. So I have 6 separate equity accounts that all need to get lined up here. So typical ordering for these, we're going to start with common stock, additional paid-in capital in excess of par. Common stock is reported at par. Next, you typically do retained earnings. Then you do accumulated other comprehensive income. Then we'll do treasury stock. Then we're actually going to put a total column in here. Total company B equity. And then we will separately break out non-controlling interest and give us essentially a consolidated total. There's all of our accounts. An equity statement is a roll forward statement. So we start our equity statement with beginning balance. So the beginning balance of common stock, we can go up here and find common stock. Beginning balance of common stock was $52,830. Additional paid-in capital. Now we know we did not issue common stock, so we'll have no additional common stock and no additional paid-in capital because we started and ended with the exact same number of shares. So we know that our beginning and ending balances are the same. Otherwise, we would have to figure out how much we issued, and that would go into figuring out our beginning balance for those. Now, retained earnings. The balance of retained earnings as listed in our trial balance is our beginning balance of retained earnings. So there is our beginning balance of retained earnings. And after we do our closing entries, when we close everything out to retained earnings, it will be our new updated balance for retained earnings. But our beginning balance is what's listed in the trial balance for retained earnings. Accumulate other comprehensive income is the exact same way. We know what the balance of that is because we haven't closed anything out to it yet. So there's our accumulated other comprehensive income is $1290. For treasury stock, we know we ended the period with treasury stock of $97.70. We also, in additional information, we have that we purchased additional treasury stock for $100. So if we ended with $97.70 after buying $100, we know that we actually started with $96.70. So we're going to put in treasury stock of $96.70. Treasury stock is a negative. We're just going to go ahead and put it in $96.70. So it is a negative. In this case, that just simplifies our adding things up. So our total equity is going to be the sum of all those, which is $70,149. Our non-controlling interests that we have listed up here as well. Non-controlling interests equity of $2620 is the balance there, which gives us a total consolidated equity of $72,769. Okay, there's our beginning balance. Now, typically, we would now just add in our net income and dividends and other comprehensive income, et cetera, et cetera. However, if you recall, we had this prior period adjustment over here. This prior period adjustment should go into our equity statement as a adjustment to beginning retained earnings. So what we're going to do is we have to put this in as a prior period adjustment. This is going to have to be net of tax because it should have been tax affected when we did it way back when, and it is not here in our income tax line item from our income statement. So it has to be net of taxes. This is only going to affect prior period retained earnings because the net income impact of this should have been closed out to retained earnings as part of our closing entries. Now, the prior period adjustment was $7,070, so equals $770. We need to tax affect this. The tax rate is 30%, so we're going to multiply times 0.7. So that gives us a effect of $49.49, which gives us a adjusted beginning balance. There are our new adjusted beginning balances. If you notice, our retained earnings, it was adjusted for that prior period error. Now we can go ahead and do our normal equity stuff. So our net income for the period needs to get put into retained earnings. So our net income, we calculate it right up here. Net income attributable to Company B shareholders goes right there, and net income attributable to non-controlling interests goes right over under our non-controlling interest equity section. There's our net income. Next, we will take out our dividends. Dividends also come out of retained earnings. Dividends, if we go back up here to our trial balance, dividends was $7,140. We do not have to tax affect our dividends because dividends are not taxed at the company level. They are just a distribution. So we'll show those as a negative. So there's dividends. Now, our other comprehensive income for the period was our currency translation, net of taxes, and that goes into accumulated other comprehensive income. We know what that was. It's right up there off of our statement of comprehensive income. So there's our other comprehensive income adjustment. And as I mentioned, we have this other information up here that we purchased additional treasury stock for $100. So we will do purchase of treasury stock, which will change our treasury stock amount by $100. So we'll just type that in. Okay. These are totals that we can, and this should be our ending balances. Down here. There it is. There are our ending balances for equity. And there we have our equity statement. Now that we have our income statement, our comprehensive income statement, and our equity statement, we can move on and complete our balance sheet in the next video. Until then, have a great day and God bless.